Technical analysis, or TA for short, and charting, they are both common terms that refer to an analytic approach that mainly focuses on price developments that are likely to influence future market prices. It could be markets such as the stock market, commodity futures, various types of currencies, and so on. Technical analysis methods mainly utilize clear past price action. This often refers to how charts behave at certain reference points and within certain patterns, along with the application of ratios and sequences. The end result provides for a higher degree of reliability and objectivity for planning entry and exit points for trades and investments. This not only applies to price charts from all markets, but it also applies to all time frames and time periods. These features underlie core technical analysis concepts that make up the key principles of advanced analysis techniques. This is true for all techniques, whether they use indicators or not. After all, indicators are derived from sequences and ratios. Indicators are helpful, but not entirely necessary. So the main focus will be on core charting elements that can be complemented with indicators if you choose to use them.